Hey there, this is Arthur Hill, Chief Technical Strategist here at TrendInvestorPro.com. This is being recorded on Wednesday for Thursday, February 11th. You're tuned, of course, into Next Level Charting. Thank you very much for joining us. So today we're going to talk about timing pullbacks within uptrends because we've got, SPY and QQQ and IWM hitting new highs. So we're basically within trend. We are in the trend monitoring stage of a trade or of a trend following strategy that we might be using. In other words, we don't really have a setup. I've got a couple setups to show you, but we're going to look at timing pullbacks within uptrends because we had some really nice setups in the industrial metals related ETFs, DBB and XME, also in the energy ETFs that I'm going to show you. And then we're going to look at a couple of setups currently in the making in JETS and IHF, the healthcare providers ETF. Let's hit the charts. So the first thing I do when I sit down and I look at a chart is I have a couple of objective, emphasis on the objective indicators that tell me the direction of the trend, the bigger trend. And we don't need to be a rocket scientist to figure out the trend on this chart because first, prices are going from the lower left to the upper right. Second, we're well above a rising 200-day moving average. And then third, I've got this 125-day fast stochastic, and it has been above 60, which is my bullish threshold there since mid-July, and that coincided with that break above the 200-day. So I've got three indications that are pointing to a clear and present uptrend. So what does that mean? Well, when you have an uptrend, that makes it easy because it sets your trading bias. In other words, you pretty much ignore bearish setups. Sure, there are going to be pullbacks along the way. We don't know how deep they're going to go or how long they're going to last, but a pullback is an opportunity to partake in the uptrend. So how do we identify those pullbacks? Well, I've got a couple of indicators here. Also, we can do some basic chart analysis, which is usually my preferred method. But since we've had this uptrend, we've had two playable pullbacks. The first one was here in September, and we get this kind of flag wedge thing and a breakout. And the second one is here in January, and we also got a flag type pattern and a breakout. And while I'm at it, I just want to talk about how short-term support levels are really red herrings. They're designed for distraction and to throw you off. Here's a short-term support break. Well, come on, that's a consolidation basically. Here's another short-term support break, and that's just setting up the next mean reversion bounce. So let's get to mean reversion. What are we looking for? So we know the trend is up. So for a mean reversion setup, we're looking for RSI, which is this indicator here, to move into its oversold zone, which I characterize as between 30 and 50. And so you can see here in September, October, we get into that zone, and we did that here in January and February. So when we get into that zone, it tells us, hey, we've got a pullback, a consolidation within an uptrend. It's time to be on alert for a potential breakout. And then we can go to the charts, or we can use something that is a little more sensitive, and that would be StochRSI. And that is basically the stochastic oscillator applied to RSI. So it's like giving Red Bull to RSI to give it a little bit more energy. As you can see, RSI, 14 period especially, it kind of trends a little bit. You see it trends down here. Well, this is trending up. It's just losing momentum, but that's not a bearish loss of momentum. But back to StochRSI. So you get RSI into the oversold zone. StochRSI is flirting with that 0.20 area, and then boom, you get this little momentum pop above 0.80, and that coincides with a little breakout there. And you can see here in the second week of February, we get this momentum pop above 0.80, and there's that little breakout there. So on this chart, it looks like we are continuing this uptrend with this breakout that we have here in DBB, the base metals ETF. So here's an ETF that's a little bit related to base metals. There's a lot of steel stocks in this ETF, the XME, the metals and mining SPDR here. And first of all, the trend is up. We can see that the Stoch close indicator or stochastic, full stochastic, turned bullish there in July. We're above a rising 200-day moving average here. So the long-term trend is up and prices are moving from the lower left to the upper right. Now we can see an example of some pullbacks. Now this pullback really overstayed its welcome. It lasted a long time. It wasn't a pullback, it was a consolidation above the 200-day. And you know, sometimes you're going to get a little bit of noise in these tight consolidations. So you can see here, we hit RSI into that oversold zone, and we got a stochastic pop here, but we fell back to the 200-day. So that's a bit of a whipsaw there. Those are going to happen. But we're still in that oversold zone. We still got the setup, and we get another pop here. And that's a signal too. And we fell back a little bit, RSI back into that 40, 32, 50 zone, and another pop. And that one was a dandy. So that one paid for a couple of whipsaws that you might have had. So looking at the chart now, we basically have this kind of flag-like pullback. So you had a really sharp advance, basically, and then you correct back. And you can see there's support here from these lows. But, you know, I'm about to give up on support with ETFs because it really is a nebulous thing here. Because, you know, here's this support break that didn't amount to much. It was the red herring. I really want to focus on the patterns and the oversold conditions within an uptrend. So the pattern is the bull flag here. And then we're oversold because RSI is in that 30 to 50 zone. StochRSI is flirting in that 0.2 area. And then we get the momentum pop and we get the flag breakout. So this looks like a bullish breakout to me on the chart. And now you're in the trade management stage. You decide if you want to put a profit target on it, if you want to have a trailing stop on it, somehow an ATR trailing stop, which you can find on StockCharts ACP. I'll show you that in a second here. But that's the second setup here related to metals. So here I am on StockCharts ACP, and you see the little plug icon in the lower right. Well, if you click that, you can see the plugins that are available from StockCharts. And I've got the Trend Investor Pro Indicator Edge plugin. And on the left, you can see I've chosen the ATR Trailing Stop. Direction is long, calculated from the close. Trigger price is the close. We'll go into that in a minute. And we go up here, we can see the ATR multiplier is 22. Sorry, the ATR periods is 22. The multiplier is 2. So this is that red line here. So we've got a breakout, and I put that ATR trailing stop. And what it does is, as long as prices move higher, this is going to trail. And it's going to be 2 ATR 22 values below the highest close. So at this point, there is the highest close, and we haven't gone above it. So that's why the ATR trailing stop flattened. So what I usually do is, when we have a breakout here, I put an initial stop based on the low right before the breakout. Now, I'm not going to use this low. I think it's kind of a spiky low. I would use this low here just below 32.50. And if this moves higher, keep that ATR trailing stop there. This is the Stoch close indicator as well, and it is part of the Indicator Edge plug-in to help you define the overall trend. So an ETF that I like to use to track the energy complex is the DBE ETF from Invesco, DB Deutsche Bank Energy Fund. And if you look at this ETF, I'm on the Invesco website here, and you can see the holdings here. So it's got WTI crude, New York Harbor, gasoline, Brent crude, natural gas. So it's as good as a representative of the energy complex as you can find out there. So here is DBE on the chart, and the trend is up here. And, sometimes we don't get RSI into that 30 to 50 zone or 40 to 50 zone for a playable pullback. You can see here in December, it didn't get there. But then you can use StochRSI on its own if you want to be a little bit more granular or short-term oriented. As you can see, there was a bigger pullback here, but that was below the 200-day and a bigger breakout there that was bullish. Stoch close was already bullish here, or full stochastic in August. And then you can see along the way, we had these really little pullbacks, very tight consolidations. And most recently, it was a very tight flag-like consolidation. And so StochRSI gets down to 0.2 as momentum flattens short term, and then boom, there's the pop and there's the breakout. And so with this breakout, we're getting pops as well in the energy related ETFs. So here is an excerpt from Thursday's ETF report on trendinvestorpro.com. I cover a lot of ETFs on Thursdays and highlight the setups. And what I do here is I've got the chart, and then I've got the commentary just to the right, which makes it really easy to follow. And there's that flag that we had in DBE and the little ones along the way and the breakout. And then we had a breakout as well in XES and a little pennant there and a breakout, and then the flag. And there you can see RSI moving just below 50, barely got into that oversold zone and got that flag breakout. And that was Wednesday's close the previous week, and it's extended a little bit further since then. But that's just a taste of what we offer on trendinvestorpro.com. So here is XOP, and it is actually a little bit stronger than XES because it is hitting a new high. It's gotten above that June high here. So, you had a little pennant there as well, a little flag, and a breakout and a new high. RSI just getting below 50, and then the stochastic pop. Sometimes you get the flag breakout before the stochastic pop, StochRSI pop, So that's why you got to always be watching the charts to get the leg up and get the edge. So we've got a couple of bigger consolidations I want to show you. These are going on over a month. The first one here is in jets, and it is, of course, the airline ETF. But that is a nice little flag-like consolidation. So you had this big breakout move to above that June high, and then we've consolidated. And you can see that RSI has been flirting with that oversold zone for a few weeks now. We had an initial StochRSI pop there in mid-January, but fell back, and this sometimes happens. But we've gotten another pop along with this breakout. So it looks like Jets is poised to move higher. It's a fairly volatile ETF, as are the energy ETFs. So consider that if you're interested in trading this. There's a little bit of higher risk. So I'm running out of time to do IHF, but you can check that out on the chart and apply the principles that I talked about today. So that concludes this edition of Next Level Charting. Check out trendinvestorpro.com or follow me on Twitter at Arthur Hill if you'd like to know more. Thanks for tuning in and have a great day.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.